Hey, what's up, everybody? It is Wednesday, June 10th. How you doing? Another beautiful day here in New York City. So, Fed meeting today. What happened? Basically, the Fed said it was going to keep on doing what it's doing. And no rate hikes until 2022. At least that's what they're saying now. You know, the Fed nowadays, anyway, always kind of seems to follow the market. Interestingly enough, on that comment, on that observation, it was Janet Yellen, remember? The Fed chair before Powell, a woman who, she was tougher than all of them. She didn't follow the market. She decided it was time to raise rates, and so she started raising rates. Anyway, I digress. I don't want to get into Janet Yellen. So what happened? Basically, as I forecast, market went down, and I think this is just the beginning of that correction I was talking about, and hopefully, you know, we'll get a nice pullback here and an opportunity to get in. But got to keep the eyes on the data. There are stories surfacing now about a resurgence in coronavirus cases. And I don't know if you've been following that, or I don't know if you've been seeing that, but it's been popping up. And Fauci, the coronavirus guy of the administration, he says we are nowhere near the end of this pandemic. The World Health Organization has cited the most new cases ever now. It just hit a new record. So, I mean, places like Texas, and I think there's something like 10 or 15 states now where the number of cases are increasing. So got to keep your eyes on that. And of course, as I've been saying, July, there are some potential stumbling blocks in July. I went over that on my last video. But anyway, right now, this just looks like an overdue correction to me. So we had a big rally in gold. By the way, if you were a subscriber to MMT Trader, last week when gold dipped down to like 1670, we were buying. I sent down an update. I said, buy GLD, buy gold futures, buy Newmont Mining. I mean, all those things popped way back up. Gold almost at 1750 today. And in the breakdown, actually, if you look at the market composition of gold right now, what some people call it the commitment of traders, futures positions that are reported by the CFTC. We are in a very interesting setup at this time, and I think we could see gold finally make a move above 1800. Now, gold's fundamentals on its own are bullish, and they've been bullish now for a number of years. It's not just about the Fed. It's not, you know, it's gold's own proprietary fundamentals now that are bullish. But the fiscal expansion, look, they're saying we could see potentially GDP rise at a rate of 25% when everything snaps back. That's annualized, of course. We could have like something like a 6% GDP growth rate in the third quarter. So annualized, you know, that's going to come to like 24, 25%. That would be historic. And that's inflationary. And it's no wonder that gold is reacting to that. And it's no wonder that the dollar is going down. The dollar index breached 96 today, hitting the 95 handle. We had a big move up in the euro. We've had a big move up in the Australian dollar. We've had a big move up in the New Zealand dollar. Even the beleaguered British pound is up. And even the yen is up, which is normally something you wouldn't see when you have a strong rally in stock prices, because the yen is considered a safe haven. When it's a risk-on atmosphere, traders tend to sell the yen, but that hasn't happened. The yen has been rallying. So the dollar falling against a broad basket of currencies here, and that is also something which I think will stoke inflationary expectations in the bond market. And we recently saw the bond yield, 10-year yields, almost back up to 1%, pulled off a little bit, but let's see what happens with the Fed now signaling that it's going to sit on the sidelines. You know, a lot of people, they're fixated. I did a whole thing today. I have a new podcast that's out. You can go to my website, pitbulleconomics.com, and just click on the tab that says podcast and listen to it. You know, and I've been going over this thing here with how frustrated and you know, just incredulous most of mainstream Wall Street is right now, because they've seen the stock market rise and nobody's really in it. I mean, we were in it at the bottom. And they're just sitting there scratching their heads and saying, you know, it's a disconnect. It's a disconnect. I mean, we still have the economy largely shut down. It's starting to open back up now, finally. GDP took a huge hit. Coronavirus is still out there. Yet we see the market run way back up. And some of them who think they're smart, they're like, oh man, maybe it's the Fed. It must have been the Fed. I should have understood. And yesterday I did my video. I'm like, they're all saying, hey, you know, why do we need fundamentals anymore? Why do we need valuations anymore? Why do we need corporate profits anymore? Why do we need anything anymore? Because no matter what happens, the Fed is going to push the market up. And I said, well, if you know that, if you believe that to be true, then your job has just been made 1,000,000 times easier. Why don't you just buy? Like, they're crying, right? It's almost like they're saying, please put it back the old way, which there never was an old way, because as I said yesterday, markets are a function of policy. We live in countries where there's an overarching political system, and the political system puts out policy which affects economies. They don't seem to understand that. They think we're living in some kind of jungle world where everything is just like some fantasy free market world where there's no outside hand coming in to have any effect whatsoever. But anyway, if you know that to be true, or if you believe that to be true, and yesterday I said it's not true anyway, they have a false understanding. Completely false understanding. But you would think, why are they crying? If they're saying, hey, it's just going to always go up because the Fed is always going to be there to buy it up, then why are you crying, man? Right? Why are you crying? Then you have just solved the mystery. But the thing is that they can't even make money that way. They can't even make money that way. You know, in their minds is some fantasy world that they want to go back to where there are no outside influences on the market whatsoever. They believe that there's some kind of, old way that things were done where there was no outside influences on the market. And if only they were back in that world, they would be doing so well because they're so smart. But when there is an outside influence known as a political system, policy, then it's like, why should we bother? It's just going to keep going up. Well, yeah, if you know that, then why don't you just jump? They still don't jump in. So, I mean, they're wrong on so many fronts that it's number one, it's fascinating to watch. And number two, it's really comical to watch. I mean, you have to admit, it's very funny. It's very funny. And if you know these people, and I know a lot of them, I spent my whole career on Wall Street. I've met a lot of these people. I mean, they take themselves so seriously with their conferences, and their meetings all the time. Conferences, meetings. Organizations we belong to, people we know, name dropping. I know this, I know. Boards. It's incredible. It must be the Fed. Oh, then, why should I bother? Because it's only going to go up all the time. So buy it. But they don't. And I'm telling you something, even if they did. And what I said yesterday was, even if the Fed sits on its hands and does nothing, If we abolish the Fed, even, they're printing money. It's still going to happen because government spending is money printing. All government spending is money printing, but it's done with a computer. So it's like to them, it's the Fed, it's the Fed, it's Fed. So buy it. No, we can't do that. We have to wait to go back to the old way that it was. The free market. And then I could figure it out because I'm smarter than everybody. So you see, folks, it's a lot of fun. It's a lot of fun if you know how to take advantage of these people. All right, check out the new podcast. Go to pitbulleconomics.com. While you're there, pick up the Understanding the Daily Treasury Statement course. It's only $99. If you want, you can get the 3-course bundle. That includes the Daily Treasury Statement course, my 25-hour video Forex trading course, and the MMT Value Stock Selection course. That's $295 for 3 of those combined. And you could also sign up for a 30-day free trial to MMT Trader. All right, everybody. Have a good one. See you tomorrow. Bye.